This professional forex trading course by Mr. Flawless at Flawless Executions Trading Hub. And our motto is trade your way to financial freedom. This is lesson 1, and then tomorrow we look at how we analyze the forex market. We look at the technical and the fundamental aspect of analyzing the forex market. So in today's lesson, as introduction to forex trading, these are things that we're going to look at. First of all, we will look at what forex really is. Then we look at the business aspect of forex trading. We look at some forex basis, currency pairs, what are pips, spread, lot size, and some other stuffs. Also, look at the kinds or types of forex traders we have. Look at some forex terminologies. As we are starting, we will look at what is forex. Then forex is foreign exchange. Some people call it forex, some name it FS. Some people also know it as currency market. It's a global decentralized market where one nation's currency is traded for that of another nation's currency at a mutually agreed rate. What do we mean by that? Or what we mean by that is forex is not centralized. Centralized in the sense that we do not have a place like Makula market where we go there and exchange our money for items. You don't have a place, you don't have a building, you don't have some headquarters with branches. We don't have all these things. It's decentralized. You can participate in the forex market for each and every place you find yourself on this globe. You can participate in the forex market from any place inside your bedroom, on the soil, on the toilet, on your way to work, everywhere you can participate in the forex market. And this makes the forex market decentralized. And it is a place where one nation's currency is traded for that of another nation's currency at a mutually agreed rate. Here, we exchange money from one currency to the other. Now I'm in Ghana, so I'll use the Ghana cedis. So let's say I have, let's say, 6 cedis here in Ghana, and I want to exchange it into dollar. The moment I exchange my cedis into dollar, I've participated in the forex trading market. I think you get me. So we exchange money from one currency to the other. That's forex. Foreign exchange, at first it was blood. We exchange like other commodities, but in this market we only exchange currencies or money. We exchange money from one currency to the other at a mutually agreed rate. As you can know, $1 is equivalent to CCD 20 pesos now. So that the CCD 20 pesos, $1 to see this is the mutually agreed rate that I'm talking about. It is traded electronically between network of banks 5 days a week and 24 hours. Because the forex market is not centralized, because you can participate in the forex market from any place you find yourself on this planet. This is made possible because it is done electronically between the network of banks. It is done using mobile phone, a computer, a tablet. You can participate in the forex market from everywhere in this world. And the forex market is open 5 days a week, and in this 5 days it is open throughout. It is open. I'm here in Ghana and we are using GMT time, so my timing will all be in GMT. So always is open on Sunday 9 p.m. GMT and close it at 9 p.m. GMT Fridays. So between Sunday 9 p.m. all the way to Friday 9 p.m. the market is being opened for you to make your analysis, to execute your trade, to set your stop loss, and to take your profits. And the forex market is the most liquid financial market in the world, with about $5 trillion traded per day, each and every day of the 5 days that the market is being opened. The market is approximated, there is $5 trillion being pumped in the market each 24 hours. I think you get me. So the forex market is the biggest market you can find in the world and the most liquid market. In financial terms, when we say something is liquid, all what we mean is that you can put in your money at a very fast rate and you can also take out your money at a very fast rate. Don't concern yourself with these things. I think by tomorrow, at the end of the all lessons, you'll be able to understand all these things. So in short, forex is the exchange of currency, exchange of money from one currency to the other, and at a mutually agreed rate between these two currencies that we're exchanging it from and to. I think I've made myself clear, and it is traded electronically 5 days a week, open normally at 9 p.m. GMT, closes 9 p.m. GMT Fridays, and it is the biggest market in the world with about $5 trillion being traded per day. So let's look at the main participants in forex market. You have the commercial banks and the investment bank. This bank help their clients to exchange money from one currency to the other. So now if you have maybe dollars here in Ghana, you can go to the commercial bank and they will exchange it for you. You can go to some other bank, Barclays, the Fidelity banks, and they will exchange this for you. And some other banks also participate in the speculative trading from their trading desk. They also sit by their computer and do speculative trading. They have the central banks. We say central banks like the Bank of Ghana, Bank of Nigeria, Reserve Bank of the United States, the Central Bank of Europe, the Bank of England, and all these banks participate in the forex market because their doings and their policies affect the appreciation and depreciation of the currency, the rate of the currency. So those who participate in the forex market. Then we have multinational corporations. Multinational corporations like the Volkswagen, that's VW company in Germany. I think about a year ago or 2 years ago, they came into Ghana and they opened a branch here in Ghana. And because they are in Germany and they've opened a new company or a new branch in Ghana, they normally use euros there. And if they want to do anything to their branch here in Ghana, they have to exchange the euros to cedis before they can do it here in Ghana. You understand me? So any multinational corporation, any company that have branches all over the world, if they want to help a branch somewhere, maybe the main company is in US and a branch is in UK, if they want to help the branch which is in UK, they have to exchange their capital from the dollar into the pound. So these are the ways that multinational corporations participate in the forex market. And also we have investment managers and hedge funds. These are the people or big companies, private ones, that takes people's money and do the trading for them. And some other people also do hedge it for them to maintain a constant price when exchanging currencies. You're going to understand them later if you don't understand these things now. And the last people that participate in the forex market are individual investors, and some people call us the retailers. So we also do speculative trading. We sit by our computers or we use our phone and tablet to enter the market and do our transactions. I think so. These are the main participants of the forex market. Now let's look at the advantage forex have over other businesses. So the first one is minimum investment. With this, let's look at it this way. Before someone can be called a teacher, before someone can be called a nurse, before someone can be called a doctor, you have to be paying school fees for the minimum of about 3 or 4 years before you will be able to acquire the skills necessary for you to be called a teacher, a nurse, or a doctor. I think you get me. So you have to pay fees, you have to invest in your schooling. So if you calculate the amount of fees you are going to or you use in acquiring the skills required of you to become a professional, if you combine all this money together, it's going to be huge as compared to the amount of money you can use to start forex trading. If you compare these two amounts, you can see that the forex trading is having a minimum investment comparatively. And even if you look at this other way also, if you want to open a business, if let's say you want to open a grocery store, you need to hire a place, a store to buy in the things that you want to sell, and to have to decorate the place, you have to paint. So if you look at all this setup capital that you need for you to start the business as compared to forex trading, the forex trading have minimum investment. You just need some few bucks to start trading. And even as of now, some forex brokers accept as minimum as $10 for you to start trading. Then we have minimal time commitment. Now you've become a teacher, you've become a nurse, you've become a doctor. You are going to spend at least 7 hours or 6 hours at work daily on working days. But with forex, you can spend at most 4 hours in front of your screen analyzing and executing trade. So if you compare forex to other businesses in this way, you can say with forex, it needs less time commitment. Then in forex market, as you've learned and you've acquired the professional forex trading skill to trade profitably, you do not need to go and hire people to execute your trade for you, to go and hire people to analyze the market for you. You don't need an office. You don't need any inventory. All what you need is a phone, a laptop, or a computer, or a tablet, a source of internet, funding your account with a skill, proper skill, then you are good to go. Then also, it has been proven, or its recession proof. So if the economy is at that stage, a lot of companies, a lot of business will collapse, a lot of employees will be laid off because the company are not able to carry out their work to generate the necessary income for them to pay their workers. So all what they have to do is to lay them off. But with Forex, we do not mind if the economy is in a recession, if the economy is doing good or bad. The Forex market is always in full functionality. No matter which stage of the business cycle the economy finds itself, the Forex market is always there. If you have the right skill, you can always make money from the Forex market, no matter which stage the economy finds itself. So the Forex market have been proven, or its recession proved. And I have a little disclaimer for you people. To succeed, you must be willing to work hard. So hard working is the key here, and master this professional skill. And this skill, I have named it high income skill, because if you're able to acquire forex trading with the right skill, I don't know any work on this planet that can generate such income to you. For you to succeed, commitment is the key, because if you're not committed, you can't wake up early in the morning to watch your trade, to look for opportunities, or to read books about forex, or to learn if you're not committed. So you have to be committed and have to be hardworking for you to be. So in this way, these are the ways we see forex, advantages forex have over other businesses. Now let's look at some of forex bases. Forex is traded and quoted in currency pairs. Each pair is denoted with 3-letter words. So as we said earlier, forex is the exchange of currency or money from one currency to the other at a mutually agreed rate. So as we are exchanging money from one currency to the other, we need these both able to master this high income. So we need to pay. So forex is traded in currency pairs, and each currency is denoted with 3 letters. So each currency we find in the world is given 3 letters. But in forex trading, we normally trade the most liquid currencies in the world. There are 8. So a lot of forex traders only concentrate on these currencies and no other currency. Like myself, I only concentrate on this currency, and these currencies are the most liquid currencies in the world. Nowadays, some currencies are proven to be also liquid, to have some liquidity in them, which some other forex traders have tuned or have turned their attention on. But I'm yet to also turn my attention on the South Africans round, if I've pronounced the word right, the currency of South Africa, and also the Mexican's currency. They have been proven to have high liquidity, and other traders have tuned their attention to that. So these are the 8 most liquid currencies that most forex traded. About 90 to 95 forex traders concerned or look at to spot opportunities to execute their trade. So the 3 denoted words that standing for the USD, or the United States dollars, is the USD, and some people call it the green backs. Its backs is G, what do we see? So sorry for that. Then we have the GDP, that's the Great Britain pound. Some people call it the sterling or the cable. So if you are reading a certain book, the book may not be calling the pound, will not be saying pound, it will be saying cable or sterling. You have to know that the book is talking about the Great Britain pound. The euro, some people call it the FIBA or fiber. Pronunciation is relative, and which other way you can pronounce it, I think it's okay. Then the JPY, that's the Japanese yen, the currency of Japan. You have the CHF, that's for the Switzerland, that we call the Swiss franc. I did not write the country's name, sorry for that. That's Switzerland's currency. Then you have the AUD, as the Australian dollar. And some people, or its nickname is the Aussie. Some people call it Aussie. Then you have the NZD, the New Zealand dollar. Some people call it the Kiwi. Then lastly, we have CAD or CAD, the Canadian dollar. Some people call it the loonie. So you have to know the three letters that stand in for these currencies and also their nickname, because as you want to broaden your knowledge about forex, some books may not use the name that's common to all. They may be using their nickname like the Aussie, the greenback, the sterling, or the cable. So you have to also know the nicknames of these currencies. Then look at the major pairs. So what are the major pairs? The most trading activity is concerned in 7 currency pairs. Listen very carefully. The most trading activity is concentrated in 7 currency pairs. And these currency pairs are the US dollar being paired with the other 7 most liquid currencies, because there are 8. So if you exempt the USD, we have 7. So if you pair the USD with the other 7, we call them the major currency. I think I've made myself clear. And these are the 7 most traded currency pair in the world, as the US dollar paired with the other 7 most liquid currencies we have in the world. So they are the Euro USD, the Pound USD, the USD JPY, that's the yen, the USD CHF, that is USD Swiss franc, odd or Aussie USD, New Zealand dollar or Kiwi USD, and USD CAD or loonie. So these are the 7 most traded currency pair in the world, and they are called the major pairs. So if the other currencies accept the USD pair with themselves, we call them the crosses. Aside the USD, the other 7 most liquid currencies that we have in the world, if they pair with themselves, they call them the crosses. And these are some few examples, and you can name some. These are the Euro Yen, the Pound CHF, the CAD NZD, the odd JPY, and I'll give some few seconds if you can name some for yourself. How can we add to this example? We can add Pound NZD, odd Yen, is there, CAD CHF, and the rest. So if we pair the other 7 most liquid currencies, we pair it with themselves, then we have what we call crosses. Then also we have kinds of currency pairs, and all what we are saying about currency, we are all concentrated, or we are all talking about the 8 most liquid pairs. No other currency. We are talking mainly about 8 most liquid currency that I've named earlier in the previous slides. So the kinds of currency, we have commodity currency, we have safe haven currencies. So what are commodity currencies? Are currencies of nations which export high quantity of variable items like oil, iron ore, gold, etc. to other nations or to the rest of the globe. So in these 8 most liquid trading currencies, the one that exports high quantity of variable items like I've listed here are called the commodity currency. And we have 3 in the 8 most liquid currencies we have in the world. And they are Australia, that's the odd or the Aussie. They export iron ore, copper, and gold to the other part of the world, or to the world, and they export them in huge quantities. Canada export oil. Then New Zealand export dairy. Dairies are products of farm animals like milk, raw products like milk, and they have a finished product like the cheese and the yogurt and the rest. So they also export them in high quantities. So these are the commodity currencies we have, as the odd, CAD, and the NZD. Now let's look at the safe havens currency. They are currencies that tends to retain or increase in value. They do not decrease in value. They tend to retain their value or increase in value. So whether they remain the same or increase, here there's no decrease. So let's look at the conditions attached to them. When there is some uncertainties, instability, or turbulence. So when there is some uncertainties, these currencies do not devalue. They retain their value or increase in value. So uncertainties or instabilities like war, when there's a war in the country. So let's say when there is war in Canada, all the investors, those who participate in forex trading, they do not their card to lose value for their currencies, for their money in the bank, which is stored in the card to devalued. They'll just exchange the card into maybe the yen, the CHF, or the dollar. Sorry, I've already mentioned it. They are the safe havens currencies. So these are the uncertainties that the war, elections, political elections, pandemic, or natural disaster in the world that affect the economy. So we have United States dollar, the Japanese yen, and the Swiss franc. So these are the safe haven. So look at the name, safe haven currencies. They are safe when we have some uncertainty. 2001, the global pandemic. I'll show you the chart of these currencies. They appreciated in value a lot because there was huge demand for these currencies because all investors were exchanging their currencies or their money from other currencies into these safe havens currencies. So when there is a disaster, when there is some pandemic, when some nation is going to go for balloting, political balloting, like electing a president, or when there is a war, people in these currencies or people in these said currencies having these uncertainties or instabilities will quickly exchange their money into this safe havens currency. Someone will ask, what about if these things happens in the United States or the yen or the card, or you saw the yen or the Swiss franc? So if it is happening in the yen, then they will look the first to exchange their money in the Swiss franc. If it is happening in the dollar, or in the United States, they will look at the yen or the Swiss franc. So you see me. So all these three currencies or all these three nations cannot be in uncertainties together. And one thing is for sure, have the value of one. Investors have known that these currencies are the safe havens currency. So when the pandemic strike, these people were part of the world and these people had their fair share with the pandemic, but still their currencies appreciated, and other currencies like commodity currencies also depreciated. So if you see, we've named 6 out of the 8 most traded currencies, and the rest is the pound and the euro, and these two are called the other currencies. So I do not list them here. They are just called the other currencies. They are not either in the commodity currency nor in the safe haven currencies. Know what spread is. We have two prices we have to concern ourselves with. Just like any other markets like the crypto, like the synthetics, like the bond, the volatility. Currency pairs in Forex are quoted as two prices. So each and every currency pair, we have two prices for them, and the prices are bid and ask price. So let's define them. Let's note them separately. What is a bid price? Bid is the price at which someone is willing to buy the pair, and ask is the price at which someone is willing to sell the pair. Good. So before we get a spread, so therefore traders always buy bid price and sell at ask price. Sorry, and sell at ask price. I think I've made myself clear here. So put that in mind. Move on. So the difference between these two prices, that the bid and ask price, is what we call the spread. The difference between these prices are what we call the spread. So the prices of spread, that's the difference between the bid and ask price, differ from broker and currency pair. So each and every broker have the spread they set for currency pairs. I think I've made myself clear. Now, you look at Forex executions. In which way do we make money in Forex market? How do we execute? What are the names we use in executing in Forex trading? So first of all, we're gonna have buying or going long. So when someone says I'm buying a pair, or when some other person also says I'm going long, they all mean the same. Buying and going long is the same thing, and it means that buying or going long of a currency pair is anticipating of price increase. So if we anticipate that a price is going to increase, then we are buying the pair. And if we anticipate that the price is going to decrease, then we are selling a pair. Then we go to what are contract lot size. What is a contract lot size? Let me use this scenario before we go on to the slide. When you go to the grocery store, go to the market, you want to buy rice, the rice that we measure with cup, the storekeeper will ask, how many cups are you buying? Or if you want to buy a full bag of rice, they will ask you, how many kilograms are you willing to buy? 5 kilograms, 10 kilograms, or you name it, or the quantity you want to buy. If you go to a store and want to buy a sugar, they will ask you, how many cups. So lot sizes are the quantity of currency you want to buy. So we don't say I'm buying $100,000 of yen or of other currency. We don't say that. We have a way of keying in $100,000 or 100,000 of a currency in the trading platforms, and these are what we call contra lot sizes. So let's move on to the slide. It is the quantity of the base currency you want to buy, the code currency. Don't confuse yourself with the term base and code currencies here, because I know at this very first time, you are going to get yourself confused, but just listen to me. And as we are having this lesson is being recorded, and I'm going to post it on my YouTube channel by tomorrow morning, and I'll send the link into my into the Telegram group so that you can rewatch it, and then you will understand it very, very well. I rewatch it another one more time or twice, then you get the concept that I'm trying to inculcate here. So the quantity of the base currency you want to buy, the code currency, and we've already talked about the base currencies and the code currencies on our previous slide. So names of lot sizes and the new units they depict. So as in the examples that I was making, like a cup of rice, we don't say 1 cup of rice, we just say 0.1, or we just say 1. That which depicts 1 cup of rice. And if you want to buy half cup of rice, you just say I'm buying 0.5 cup of rice. I think I'm making myself clear. So this is the same concept that we use in forex trading. So each and every lot size have the figure or unit they depict, and how we key them in the forex trading platforms or softwares. So the table shows we have 4 of them. We have the standard lot size, we have the mini lot size, we have the micro lot size, and we have the nano lot size. The nano lot size, a lot of trading brokers do not allow their clients to execute trade in the nano lot size, but the micro and the mini and the standard, I think it's all everywhere. Every broker allows its client to execute trade in these lot sizes. So when you say standard lot, one standard lot, it means you are buying, listen very carefully, don't get yourself confused. It means you are buying 100,000 units of the base currency. So let's say that we are trading, sorry, let me use this. Let me increase this selector. We are trading pound USD. We are trading pound USD, 1 lot. And we want to also know that the pound here will be the base currency, and the USD here, sorry, let me use it. The pound here will be the base currency. This one will be the base currency, and the USD will be the code currency. So buy 100,000 units means we are buying 100,000 units of pound using dollars. I think you get me. We are buying 100,000 units of pound because we know that the pound will increase in value in the near future. We want to buy it low now. We are buying the pound using dollars, and are going to sell it back into the dollars to get our profit later. I think I've made myself clear. So we are buying 100,000 units or 100,000 pounds using dollars. And if you want to buy 100,000 pounds using dollars, don't type in 100,000, just type in 1 or 0.1 here. 1 or 0.1 as been written there. Yeah. So if you type 1 or 1.0, it means one standard lot. And it means you are buying 100,000 of the base currency using the code currency. And let's say you want to buy 200,000. How are you going to key in the MT4? Try. How are you going to key in? You are going to key in 2 or 2.0. That is 200,000. 300,000 will be 3.0. 400,000 will be 4.0. 500,000 will be 5.0. And 1 million will be 10.0 or 10. 1.1 million will be 11.0. I think you've understood it now. Then if our capital is low and we can't buy 100,000 of the base currency, we have to buy lower, and you have 10,000, and the 10,000 key in with 0.1. So if you want to buy 50,000, you just type in 0.5, meaning 50,000 of the base currency. Micro lot is 1,000, and if you want to buy 2,000, just type in 1,000 is 0.01, so 2,000 will be 0.02. 3,000 will be 0.03, up to 9,000 is 0.09. So 10,000, then it will reach 1.0. I think I've made myself clear. And the nano lot also is being keyed in 0.001. There is something I did not touch, which I should have included it in this slide. That's leverage, but I'll do my best to tackle on that tomorrow morning. Hey, tomorrow when we are having our tomorrow's lesson, I'll tackle on that, because a lot of us do not have this quantum of money. But with leverage, with a little money we have, and with leverage, we are able to key in, or we are able to trade with these huge quantities by the help of leverage. So don't be confused. Tomorrow I'll treat I'll treat leverage with the technical analysis. So that is lot size. Then look at the kinds or type of forex traders we have. The first one is, and with these kinds or type of forex traders, we have, you look at your personality, your business schedule, and your day-to-day activities to choose one that best suits your day-to-day activity, your personality, and your work schedules. Because all these type of forex trading we have, no one have an advantage over the other. They are all the same. All what is most important here is acquiring the skill, acquiring the profitable skills. So we have 4 of them. And the first one, the scalpers. These traders target 10 to 20 pips per trade, and trade duration is from seconds to minutes. Their trade duration do not exceed maybe 1 hour. Normally, not all the time, but normally, most of the times, they do not exceed 1 hour, because their stop loss and their take profits are so tight for the market to hit either of them in a very minimal time. And the charts or the time frame they use in making analysis is the 1 minute and the 5 minutes. Don't concern yourself with this. Tomorrow with the technical analysis, we're going to talk about them, and I'm going to teach you what all these things means. Then day traders also target 20 to 50 pips per trade. Their trade are normally within the day, that's 24 hours, and they also use the 50 minutes, 1 hour, and the 4 hours in making analysis. Then we come to the swing traders. They target 50 to 200 pips per trade, and they trade it normally lasts less than a week, as days to a week, and sometimes more. And they normally use 4 hours and 1 day for their trading activities. And the position traders, they target 200 to 1,000 pips per trade, and they use 1 week or 1 month time frame in making analysis. So these are the types or kinds of forex traders we have. And you look at yourself. If you have a lot of time to sit by your computer, then the scalping will be good for you. If you do not have a lot of time to sit by a computer, but have a relatively more time to sit by a computer as compared to the scalpers, then day trader or day trading is good for you, or the swing trading. But if you want, you are always at work and you don't have much time, then you have to go the position way to trade. And these traders normally do not concern themselves with the technical analysis. They mostly concern themselves with the fundamental analysis, which I'll teach in depth, because a lot of traders do not consider themselves with the fundamental analysis, and the fundamentals are the reason for forex price action movement. So if you're a forex trader and you don't understand fundamentals, my brother, my sister, then I don't know what to say, but you have to understand fundamentals to get your fundamental bias from the fundamentals, then and move on from there. So these are the kinds or types of forex traders we have, and based on your personality, based on your risk appetite, based on your risk schedules, based on the time you have. So if you have more time, then you can go the scalping way. If you have moderate time, the day trading, you don't have that much time, then the swing trading, because you're going to use 4 hours. So you're going to like come back or look on your screen 4 hourly, you see, or daily. So you go to your work the whole day. When you come home, you have time and you look at your chart a day, maybe once or twice a day. You see, but if you have more time, you can be looking at your chart every hour or every 15 minutes, every 1 minute. Then you go for the scalping way. The day trading also, if like 1 hour or 4 hours, within 4 hours coming downwards, you have the leisure of time to make analysis and go and look at the market. I think you can day trade, swing trader 4 hours or daily. Then the position trader, either daily or weekly, they look at their chart. So these are the type of forex traders we have. Then let's look at some few forex terminologies, and we have tackled a lot of them, so you're not going to waste time with them again. We have the ask price, which we've talked about. We have the buy, we've already talked about that. Then the forex broker. When we were treating the main participant of forex players in the forex trading business, we talk about the commercial or investment bank, the central banks, the multinational corporations, the hedge funds, and the rest. And if we look at their names, you can imagine the quantum of money they have to trade the forex market. And we the retailers, we do not have such money. So we cannot go to the big table with our little money and go and disturb the big boys there. So the forex brokers set us a middleman who allows us to, or they correct our orders, or they gather our orders and go to the big table to trade for us. And these people, or these brokers, we call them brokers, they are the middlemen, call them brokers. They are regulated. They are being regulated so that they will not dupe, or they will not misbehave, or they will not fraud any clients. But some brokers still have their way. So as a beginner in forex trading, you have to have a mentor for you to guide you and choose a better broker for you, which I also post a link to the broker that I use, so that if you want to go live in the near future, you just click on that, and with my help, if you may need it, I'll help you open a live account with my broker. So it's a licensed firm that provide traders, that is retail traders, not all traders, traders with access to trading platform to buy and sell currencies. I think I've made myself clear. You have demo trading. Demo means demonstration. So as a beginner, the brokers have a certain account that they have named demo trading, which is the same as a rare account, except that there you don't use rare money. That's the only difference between a rare and a demo account. You don't use rare money there. The money there is virtual. So in the interface, anything there is the same as trading in a rare account, and you use the demo trading to practice. As you are learning, you use demo trading account to practice your strategy to practice how to execute a trade, to practice how to set a stop loss, to practice how to set a take profit, to practice how to calculate your contract loss sizes. So we use demo trading to do all this, and experienced traders also use demo trading to see that if their new found strategy works, because they found a new strategy and they don't want to risk their hard-earned money with proving if the strategy is working. They have to use like a virtual money, and if it is proven right, then they risk their hard-earned money on. So demo trading is a very nice venture for forex traders to practice their strategy, and also for the newbies to also have their hands on forex trading. So I think next week, the course of next week, those who are interested, I'll help them create demo trading accounts, and we will practice from there. Then we know short or sell, and we also know long or buy.